Hi, Thom Abbott with mymidtownmojo.com. In this episode of our Real Estate Buyer's Guide, we want to talk to you about your lender, your loan, don't lie. So what are we talking about? First of all, if you're purchasing a home and you're not paying cash, you'll be needing to get a mortgage and working with a lender. You want to consider the lender part of your team. Just as I'm your team leader being a real estate agent, you're going to have your lender, your home inspector, your closing attorney. You want to work with a lender that you know knows the market. So for example, if you're buying a high-rise condominium, you want to know that that lender is familiar with what to do in a condominium as far as HOAs, checking reserves, that type of thing. But as you go through the loan process, a couple things we want to talk about here is, first of all, there's going to be a lot of documentation and a lot of things you're going to have to provide. That's just the nature of the market and the way it is as far as getting a mortgage is concerned. So when your lender asks for documents, don't dilly-dally, get those things into them as quickly as possible. Delaying any of those documents could delay your mortgage and could get you in trouble based on the contingencies you have in your contract. So let's make sure we get those documents into our lender really quickly. Also, tell your lender about any past problems you might have had, like if you've had any late payments or had any accounts closed for any particular reason. Most of that stuff will come up on your credit report, but if you know anything about it, it just helps to let your lender know in advance. Let me touch base quickly on pre-qualified versus pre-approved. Pre-qualified means that you've spoken with a lender, they've kind of looked at your documents, maybe they just spoke to you and learned some information about your job and how much your income is, etc. But they really haven't looked at your things in detail. That's a pre-qual. A pre-approval is when your lender goes through and actually looks at all of your documents. They truly get your paycheck stubs, your W-2, your bank statements, your tax returns. They put all that stuff in, they look at it, they analyze it, and they run it through possibly a desktop underwriting program and literally give you a pre-approval for your mortgage. Now the only thing we're waiting on is a contract and an appraisal. That is a big difference that you want to know about between a pre-qualification and a pre-approval. Lastly, there's 5 things that you do not want to do once you start home shopping and actually start shopping for a mortgage. Number 1 is do not apply for any other credit cards. Don't open any type of credit or have any type of inquiry on your credit during the home mortgage process time. Don't change jobs. It might seem kind of silly, but actually it's very important that once you start the mortgage process, your employment history is consistent. Number 3, don't buy a car. Sounds silly, but it's happened. Don't buy a car. Don't buy furniture. I know you got that new condo or that house and you've got rooms to fill, but you need to wait to buy that furniture until after you've closed on your home. And last but not least, don't make any large deposits to your account unless you let your lender know in advance. Let's say you're suddenly getting a gift from a family member, or perhaps a bonus check just came out at work. It's not that you can't deposit those, but let's make sure we let our lender know what it is and why it's coming in and provide them the documentation. Your lender will pull your bank statements or ask for a copy of your bank statements anywhere from 1 to 2 days before closing to make sure nothing has changed in your history. That's some information about your lender and your loan. Don't lie. Stay tuned for the next episode of our Real Estate Buyer's Guide. Thank you.